Hi, everybody. Thank you so much for joining us for our presentation today on the charitable tax benefits that were included in the CARES Act earlier this year. My name is Jessica Nelson. I'm the Director of Plan Giving, and with me is Ann Morse. She's the Director of Plan Giving for U Health. We're both licensed attorneys, and we hope you find this presentation beneficial, especially if you are planning on making any end-of-year tax gifts to charities. If you have any questions about anything that we present, our contact information will be listed at the end of this presentation. Thanks.
Thank you, Jessica. As many of you know, the Coronavirus Aid, Relief, and Economic Security Act, also known as the CARES Act because Congress loves a good acronym, was passed in March of 2020. And it is a 340-page, $2.2 trillion response bill to the pandemic that we are all facing. So we're only going to cover a few points contained within this legislation. But before we start today and get into the nuts and bolts of this legislation, we want to say thank you. The CARES Act has been made necessary by a terrible pandemic, and foremost in everyone's minds are really the acute concerns about our continued health and financial well-being, and really of those we care about. Nevertheless, we understand that many of you are also eager to do what you can to help. And through this presentation today, we hope to provide you with some valuable information on how to do so. We truly appreciate your generosity of time and spirit. So let's get into some of the CARES Act provisions that are key for our year-end tax and giving strategies in 2020. Take it away, Jessica.
Thanks, Ann. First, there's a new charitable deduction for non-itemizers. It is an above-the-line adjustment to your income that will reduce your AGI and thereby reduce your taxable income. This adjustment is available for cash gifts to public charities and is limited to up to $300 per tax filing unit. A couple of things to be note of is it's not available to any gifts to donor advised funds, nor is it available to gifts to supporting organizations or gifts from previous years that you've carried over don't also qualify for this. So basically, in plain language, if you donate up to $300 to a qualified charity, your AGI will be reduced by $300, and you can still claim your standard deduction. This change will encourage 90% of taxpayers who do not itemize to make more cash gifts in 2020. This is a big deal, as most of you are aware, with the Tax Cuts and Jobs Act of 2017. That drastically reduced the amount of people who itemize on their tax returns. So this is an incentive for people in 2020 who take the standard deduction to still support the charitable missions that they care about at a time when it's most needed for all of us. Ann?
Thanks, Jessica. Now, second, individual taxpayers who do itemize deductions and contribute cash to a public charity like the University of Utah may deduct up to 100% of their adjusted gross income, which we're going to refer to throughout this presentation as AGI. This is for your 2020 tax returns. And as some of you may recall from just filing your 2019 tax returns back in July, such charitable contributions used to come up against a 60% cap of your adjusted gross income. And then you had a 5-year carryover period for any amount of the deduction you weren't able to use in the year the gift was made. But now, thanks to the CARES Act for 2020, that 60% limitation has risen to a full 100% limitation, which is really no limitation at all. Plus, taxpayers can continue to carry forward any excess charitable contributions for up to 5 years following the year that the gift was made, of course, subject to future income limitations in the years that follow.
Great, Ann. So for those of you that are 70 and a half or older, I'm sure you're very familiar with the required minimum distribution that you have to take every year from your individual retirement plans. For this year, those RMDs are waived for individual retirement accounts, and that's including inherited IRAs, 401ks, and 403bs. Given the extreme volatility of our market during this pandemic, this is a benefit that will hopefully allow your retirement plans to recover from all the ups and downs of this year in our market and bring it back to where it was pre-pandemic.
Okay, so now I'm going to use a lot of acronyms on this point, but it's important to note that here we are talking about retirement account distributions. On individual retirement accounts, qualified charitable distributions, or QCDs, can still be made through required minimum distributions, or RMDs on this slide, even though RMDs have been suspended for 2020. The minimum age for making a qualified charitable distribution from your IRA is still 70 and a half, and the annual limit is still $100,000. But it's still possible for those of you that want to support your favorite causes in 2020 to take distributions from your IRAs and take them as cash, and then then you can report them as income, and then you can make a deductible gift in 2020 to your favorite charity with that unlimited adjusted gross income limitation. So the takeaway from all this is, if you direct a qualified charitable distribution directly to charity without taking the distribution yourself, you can still do that for up to $100,000 per individual, and you will still reduce your taxable IRA balance for years to come. So really, all taxpayers, itemizers, and non-itemizers alike can direct gifts from their IRA to charities in that same tax efficient manner, even though there are no required minimum distributions for those who are 70 and a half or older for 2020.
So there are also some benefits to corporations for their charitable giving that was also included in the CARES Act. One of them being is that cash contributions from corporations, which has normally been at 10%, has been raised to 25%. And also the limitation on deductions for contributions of food inventory has also changed. And that as well has increased originally from 15% to 25%. The takeaway from this is hopefully businesses are able to support their local charities that are helping those with food insecurities during this pandemic, really contribute and give back and help those people. So this is a great benefit for anybody who has the business and is looking to make some year-end gifts.
I'm going to talk about a little bit more complicated benefit offered under the CARES Act, but it can be a tax advantageous strategy for the savviest of those who want to give to charity in 2020, who may also consider increasing, something we don't normally talk about, increasing their adjusted gross incomes to take advantage of that unlimited tax deduction for gifts to public charities by converting part of their qualified individual retirement account to a Roth IRA. Now, this is advantageous because your traditional individual retirement account, as we've been discussing, is typically subject to required minimum distributions once you reach a certain age, and those distributions are subject to income tax. But by converting all or part of your individual retirement account funds to a Roth IRA this year, those funds in the Roth will not be subject to the required minimum distributions in years to come, and the funds you take out of the Roth are not included as taxable income in future years. So now please note, normally like the funds being converted from the traditional retirement account have to be reported as taxable income in the year of the conversion. So the year we're talking about is 2020. But since it is 2020 and the CARES Act is providing for some tax benefits this year, in 2020, you have the opportunity to offset that reportable income from the conversion if you make a likewise contribution of cash to a public charity, because remember, as we highlighted just a few slides previously, you have the chance to make a gift of cash to a public charity that can offset up to 100% of your adjusted gross income in 2020. So this offers the opportunity for those of you that are really desiring to support the charities that you love this year to get an even larger charitable contribution deduction in 2020, and then not pay federal income tax on the Roth IRA conversion of those funds. A little bit more complicated, something you want to talk to your financial advisor, your retirement plan administrator directly about, but it could be very advantageous and, like we said, made possible by the CARES Act here in 2020. So now we have some frequently asked questions that, as we've been discussing the provisions of the CARES Act this year with our constituents that have arisen, and we thought we'd just go ahead and address them during this presentation. First of all, we have, are the enhanced tax deductions restricted to charitable gifts that support COVID-19 related relief efforts? So can you only give to those efforts that are going directly towards something that would support either COVID-19 research or maybe protective gear or something of that regard, as you may have heard about? The answer is no. The charitable deductions that we have been talking about today under the CARES Act are applicable to charitable gifts going to any cause that an individual would like to support. The donation does not have to be related to COVID-19 relief efforts.
Our second question is, can I donate cash to set up a charitable gift annuity and still use the 100% adjusted gross income limitation? This is one of those answers that it's a yes, but. So normally when you set up a charitable gift annuity, a portion of the money that you use to establish it is considered a charitable deduction, and the other portion is considered income because you receive a life income stream from it. The portion that is considered charitable deduction can be used to go towards that 100% AGI limitation. But like I said, it would have to be for cash, so you couldn't establish it with securities or anything. And it's only that portion of the amount that you're using to establish it that's considered the gift portion that can be go towards your 100% AGI.
Very good. Okay, question number 3. Are charitable contributions to a private foundation considered qualified contributions under the CARES Act? There are certain types of private foundations that would qualify, but by and large, family foundations, corporate foundations, and private non-operating foundations would not qualify as recipients of the charitable contributions under the CARES Act. But we do want to make you aware that all gifts to the University of Utah, including gifts to University of Utah Health and all of our cultural organizations on campus, do qualify for the charitable tax benefits that we've discussed regarding the CARES Act today.
That's great, Anne. Our fourth question is, should I maximize my charitable giving to offset the full 100% of my adjusted gross income, or can I carry over some of the deductions amounts into 2021 and beyond? If you have the ability to maximize your 100% AGI, that's wonderful. And as in all previous years, if you have any excess, you are able to carry that over and spread it out over the next coming 5 years. But there's a point that you should be mindful of, that any additional amount that you carry over into other tax years will not qualify for the 100% AGI. That will be at the normal 60% AGI. It's only the amount that's counted for this year that you will be able to get that 100% AGI. Like we've mentioned before, it's always wise to talk to your individual tax advisor if you have specific questions around your specific tax situation. But this is a great benefit, and if you have the ability, it's a great opportunity to take advantage of it, because we'll probably never see this again in our lifetime.
And question number 5, last but certainly not least, I hate to end on a sour note, but can you take the new $300 deduction if you itemize deductions? Sadly, the answer here is no. If you itemize, you will still claim all of your charitable donations on Schedule A. Unfortunately, we don't get to double dip on this. You can either take that 100% adjusted gross income threshold and use itemized deductions, or you can just simply take this standard deduction, but you will get that above the line $300 deduction on your tax return. Right,
Thanks,
so
Ann.
that concludes our, oh yeah.
Those are some
Off to
great,
you, Jessica. You read the
yeah.
language.
Yeah. Those are some great frequently asked questions. So Ann and I are both licensed attorneys, and it would be unprudent of us if we went through this presentation and did not have a disclaimer. So I'll briefly read that for all of your benefit. The information provided herein does not and is not intended to constitute personal, financial, or legal advice. The contents of this presentation are for general information purposes only and should not be relied or acted upon without specific professional, legal, or financial advice based upon an individual situation.
Very good. We always have we told you a bunch of information, but a caveat on how to use it. So thank you so much for listening to our presentation today. We hope you found this information valuable. And if you have any additional questions about what we discussed, or if you're interested in learning more about what planned giving is, or how to make another type of a planned gift to the University of Utah to support something that you're passionate about, please feel free to call or email us at any time. Jessica's information is up there, along with my information and our centralized planned giving email address and phone number, as we are primarily working from home nowadays, but we promise we will reach out to you with any information that you would like to hear more about. So again, thank you. We wish you health and happiness for the year to come.
Thanks.